What's up everyone, it's Caddy with MoneyVest. So in this video, we are going to be talking about Tesla stock, which continues to get hammered here every single day. So far in 2024, as we already know, it is down on the back of several price cuts and downgrades on expectations, and the outlook being not as strong as what it was previously as we were entering this year. And Tesla is one of the worst performers in the S&P 500 as well, down a little bit over 24%, actually now down over 31% on a year-to-date basis. So definitely Elon Musk and Tesla not getting the optimism or the momentum in 2024 as opposed to the S&P 500, which is up a little bit over 8% so far on the year. The NASDAQ also being up very nicely, both of them hitting a new all-time high. The S&P is actually up over 10% on a year-to-date basis, and the NASDAQ being up a little bit over 10, also 10.5, close to 11% on the year. So hope you all enjoy this video. We're going to break down exactly what is going on with this company and take a look at the technical analysis on this stock as well. As always, make sure that you drop a like and don't forget to subscribe to the channel. I would really appreciate that, and links to our Discord and Patreon is also going to be down below if you are interested in joining us, and of course getting access to all the members only private videos, including the 16% annual discount that's available until the end of this month. So this right here was the catalyst. So Tesla here trimming output of cars in China amid slower EV sales growth, and Kathy Wood also did pick up over 116,000 shares of Tesla once again today, as she continues to build out a bigger and bigger position, as Tesla was one of her biggest positions, still is, and she's buying more on this dip. Now, before we get any further into this, so Tesla falls on China production cut as delivery miss looms. So Tesla has reportedly reduced production at its Shanghai factory over in China amid a slowing EV demand in the world's largest auto market, and they did ask its employees to cut its number of days that they actually work from 6.5 days to 5 days a week, and the output cuts start earlier in March and could continue through April. And the move comes amid slowing EV growth in China, with Tesla's Shanghai facility already not producing at full capacity. And Tesla observers have repeatedly said in recent weeks that the global inventory appears to be high. And reading further, you'll notice that Li Auto also slashed its first quarter delivery forecast, implying the March sales that are roughly half of what the Chinese EV maker predicted as recently as March 1st here. So we're definitely seeing a little bit of softening in the overall demand in China. And Tesla delivered over 60,000 vehicles in February, down about 19% compared to last year as well. This was from CPCA, the China Passenger Car Association. As I mentioned earlier, as March is ending, the first quarter is coming to an end, and Tesla will be reporting its first quarter deliveries very soon. Wall Street consensus expectations are right now sitting at around 418,000. So that right there is going to be that number. And analysts have already cut their predictions down for Q1, as they are expecting a delivery miss from Tesla when they report that number. So 481,000, if you annualize that number, 481 times 4, we're looking at 1.9 million vehicles, which is going to be a slight increase from last year. But of course, it's going to be nowhere near close to the increase that we are accustomed to seeing from Tesla. That's only going to be about a 5.5% increase year over year, as opposed to the 40 to 50% increase that we were expecting, from a production basis, not from a delivery basis, but on a production vehicles basis from the company as well. But as long as they're able to maintain, so that's the thing, right? So when people talk about a compounded annual growth rate of about, let's say, 40 to 50% or whatever that rate is, when we're talking about the CAGR, the compounded annual growth rate, that doesn't necessarily mean that every year the company is going to be precisely hitting that number, right? It simply means that on average, if you take a look at the long term, 5 years, 10 years out, the CAGR is going to come down to that percentage, right? So if Tesla is kind of guided for, 40 to 50% CAGR over 5 years, it doesn't mean that every year Tesla is going to be hitting 40, 50% growth. It simply means that some years it's going to be lower, some years it's going to be much higher, and it's going to average out at around 40 to 50%, whatever their target is. So as long as they're able to hold on to these stable growth rates, and they're able to still deliver 1.9 to 2.1 million vehicles in 2024, considering the significant headwinds with respect to macros and interest rates and inflation and the cost of production and the price cuts and the price war and the competition, I mean, the list goes on and on. As long as they're able to consistently produce vehicles and deliver them at a stable rate, I think this is just a tough period that Tesla needs to get out of eventually. And we already know that there is, unanimity when it comes to interest rate cuts, and that's only going to be softening a little bit of that cost of borrowing, and that's going to help a lot of people when it comes to financing their vehicles. Another huge catalyst, as we discussed in our previous video, was the entry in India with a $500 million production and the manufacturing facility that they need to build in order to be able to export vehicles to India. Even though they have still a custom duty tax, they've reduced that rate down from 75 and 100% to those ridiculous numbers down to 15 to 20%, which is a lot more reasonable and a lot more standard when it comes to import duty tax. So that is another huge catalyst because, as I said earlier in my previous videos, India is a massive market for electric vehicles. Yes, the infrastructure is not built right now, but eventually we all know where we're headed. Now, this right here was a record 370 Cybertrucks spotted at Giga Texas today, and Elon Musk tweeted and said production is ramping. So this right here was the picture from a different angle, and you can just take a look at the amount of Cybertrucks that are being built. Hundreds and hundreds of Cybertrucks at Giga Texas today, picked by Joe Tegmeyer. And this Saturday on the 23rd of March, so today as I'm recording this video, a Tesla Semi will make a special appearance at Tesla Owners Day in San Bruno at 11 a.m. Pacific time, and it will be at the shops at Tanforan as well in California. So again, there's a lot of things that Tesla is doing, and as you are scaling and working on a lot of different projects, yes, it becomes a little bit more difficult to expand and at the same time grow, but they're kind of planting those foundations here for what is to come over the, let's say, next 5 to 10 years with the robots, with the FSD, with, of course, autonomous driving, energy, renewable energy, and again, Cybertrucks and Tesla semis. And of course, there are 3 models and 4 models that are doing incredibly well already. Now, this should not come at the expense of price cuts and margin compression, as I've already mentioned, because that would be the biggest problem for Tesla, and institutional investors will start to somewhat leave if they start to sense a lack of profitability and in a place where we're headed towards, let's say, even losses for that matter, negative cash flows. So that would certainly be not great news. I mean, the balance sheet is still strong, so the bankruptcy risk is low, but at the same time, nobody wants to see an inventory buildup, price cuts, margin compression at the same time generating losses. For short term, there is a risk related to that. I'm not going to lie, there is risk related to profitability with Tesla. That's exactly one of the reasons why investors are somewhat skeptical and concerned about Tesla at these prices, and even at these prices at 170, let's say, or 150, people are not buying hand over fist because of that concern related to profitability. Now, I've actually included one more sort of indicator here, which is the L3 Banker indicator, which basically goes over the whales and what they're doing. So as it's moving higher, so if it's green, that basically says that there's a lot of momentum, there's a lot of volume coming in, and some of the more bigger orders are jumping into the market and for that particular stock. So that basically represents whales buying, or institutional investors and bankers essentially dumping money into that stock. And if it's going down, obviously that's going to be red or blue. That means it's weakening, it's softening, and we are seeing some exiting or selling pressure from institutional investors, from one of the bigger whales in the market. Right now, you'll notice that we are starting to see a beginning of that potential institutional buying momentum. So some bankers, or whales, I should say, are starting to kind of look into Tesla once again as we are consolidating. There is some level of bullish divergence as well, because the price action itself, you'll notice we're making some lower lows, while at the same time the RSI is making some higher lows. So there is potential for a reversal from these prices. 150 is still going to be a very strong support, and you'll notice that we actually did come down, so this is going to be a much better chart. So as we continue to trade in this lower high and lower low pattern, so very, very weak momentum, we did break down from this bear flag as well. Very strong support, as I already pointed out, in the 150s for Tesla, kind of aligned with that previous support from back in April 27th, and with the negative divergence and with the institutional flow, there is possibility for us to see that momentum. Even on the day today, it got bought up, right? So intraday, it was a green candle on a red day. That does suggest that there were buyers present, and a breakout about 178, 180 is going to potentially put us on the map to retesting highs of $200 once again. But we do also have this moving average, which I believe is the 50 moving average, which is acting as a bit of a resistance for Tesla as well. So, we've got massive supply between 190s and 200. So this right here is going to be a level to keep in mind as an area of resistance and a supply where Tesla is just not able to break out of 200. We haven't traded back above 200 since January of 24. So since the beginning of this year, we haven't really traded back above 200. So that is a huge resistance and supply area to watch. But before we even get there, I think 178 and 180 is going to be the first level to break out of for Tesla. With the support levels, it's going to stay put at 150s. So that's where we are, still in a downtrend, still a bear flag breakdown. But there are positive signs from a technical perspective. There's positive divergence. There's some institutional flow that's starting to show up. And of course, we've got a MACD that's crossing over that signal line. So there is momentum possibility for Tesla to the upside. And the intraday candle also does suggest there were buyers present, as we did see, from a low 166 closing at well over 170 for Tesla. So let me know your thoughts down in the comment section below. Again, long-term picture is 1.92 million vehicle deliveries this year. First quarter deliveries expected at 483,000. That's the consensus, which has been cut down from previous expectations because of the competition, because of the price cuts, and the lack of demand that everybody's kind of seeing in China, parts of Europe, and now it's kind of trickling into the US as well, as Tesla continues to spur more demand on the back of these price cuts. But let me know your thoughts down in the comment section below. As I've already mentioned, my fair value is going to stay put in the 130s, 140s, 150s, in and around those levels, depending on what growth rates and P multiples you apply to Tesla's valuation. But of course, low 100s would absolutely be a no-brainer buy for Tesla, in my opinion. And I would be looking at selling puts at those prices as well. So thoughts down below, comment down below. As always, if you enjoyed it, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.